Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll tell you all about the domestic as well as global cues that you need to watch out for, and also tell you about the stocks that you need to keep on your radar today. But before that, let's get started with an eye on the globe and see how the US markets fared overnight. And they closed higher with the S&P 500 up about 0.4%, the Nasdaq rising about 0.6%, whereas the Dow added just about 47 points. Now, this is a good, while the gains are not as very significant, very minimal gains coming in for the Wall Street. But yes, 2-3 days of declines is what has been reversed today and overnight, and yes, gains coming in. Now, like I said, it's a 4-day losing streak that was snapped. This was ahead of Nvidia's highly anticipated earnings, and after the bell, Nvidia did jump nearly 5% as its earnings beat revenue expectations, and also the company issued a strong fourth quarter sales forecast. The CEO said that demand for Blackwell chips, that is off the charts, lifting sentiments across AI trade and boosting stocks like AMD, Broadcom and Eaton. Now, still, some analysts say that Nvidia may be nearing its peak in growth and market share. Now, earlier in the day, markets did rebound from recent weakness, though major indexes that remained down for the week. Meanwhile, Fed minutes showed that officials are split on whether slowing jobs data or persistent inflation, which one is the bigger risk. Traders are now seeing just about a 33% chance of a December rate cut. Now, in terms of what to watch out for next, September non-farm payroll data that's delayed by the government shutdown. This could be influencing the Fed's next move. So all eyes on that later today. So yes, Srishti, that's about the Wall Street snapping that 4-day losing streak and ending on a positive note. But how are things on the crude front?
Quite interesting, Kanishka, because we have seen the crude oil prices falling a bit on the renewed hopes of Russia truce, wherein some of the reports do suggest that the US is pushing to end the Russia and Ukraine war. And because of that, overnight we have seen Brent crude slipping almost 2%, but as of now it's quite stable around that $63.5 per barrel mark, and so is WTI, very close to that $59 per barrel mark. So that's about crude, but look at the move in gold, because just yesterday and day before we were discussing that how gold is now very much close to that 4,000 per ounce mark, and from those levels we have seen a very good rebound, especially in a couple of days. Gold is now close to that $4,100 per ounce mark, almost $100 move that we have seen in the last couple of days, and that's after the Fed minutes. Of course, we have seen gold gaining, as well as the safe haven demand is seen to be getting back onto the market sentiment. And with respect to the silver prices, that is seen to be steady for a bit right now.
All right, so that's about the global roundup as far as the markets and commodity markets are also concerned. But let's move on and take a look at some of the top global stories that we're tracking this morning. First up, at the US-Saudi Investment Forum, Donald Trump announced that the US has officially designated Saudi Arabia as a major non-NATO ally, calling it a sign of trust. He has highlighted a historic strategic defense agreement, large-scale military sales, including nearly 300 American-made tanks, and new collaborations on civil nuclear energy, critical minerals, and also AI. Saudi Arabia, he said, plans to invest up to $1 trillion in the US, with $270 billion in deals now being signed across dozens of companies. Let's take a look at what he had to say.
We officially designated the kingdom yesterday as the major non-NATO ally. That's a big deal. It's actually a very big deal. It's a great honor. That happens seldom, very seldom, if at all. So I just want to congratulate you on that. That's a sign of trust. We signed a historic strategic defense agreement yesterday also, and that's something that is likewise very rare, and it's a very honored company that you're in. And we're going to be selling Saudi Arabia some of the greatest military equipment ever built. We build the best military equipment in the world by far. That's why we do the most business, including nearly 300 American-made tanks.
All right, we're moving on to another story. It's Nvidia and AI that announced Elon Musk AI company will be the first customer of the massive new Saudi data center powered by hundreds of thousands of NVIDIA chips. Now, the facility is being built by Human, which plans to use the hardware from NVIDIA, AMD and Qualcomm, while Musk joked that a center 1,000 times larger would cost $8 billion trillion during the panel. The wealthiest man also added that humanoid robots will be the biggest thing with the potential to make jobs optional. Listen in.
Something like that. For me, that's long term. My prediction is that work will be optional.
Optional.
Optional. So.
We'll take that.
Yeah. I mean, it'll be like playing sports or a video game or something like that. If you want to work, in the same way, like you can go to the store and just buy some vegetables, or you could grow vegetables in your backyard. It's much harder to grow vegetables in your backyard, but some people still do it because they like growing vegetables. That will be what work is like, optional. Now, between now and then, there's actually a lot of work to get to that point. It's kind of interesting. And my guess is, if you go out long enough, assuming there's a continued improvement in AI and robotics, which seems likely, the money will stop being relevant at some point in the future.
All right, so that's the latest word coming from Elon Musk. But moving on and shifting focus back to NVIDIA, which has beat Wall Street expectations yet again, posting third quarter revenue of $57 billion, earnings of 1.3 per share. That's both ahead of estimates. And the company also issued a blockbuster forecast projecting $65 billion in Q4 sales, which is far higher than what analysts were expecting. CEO Jensen Huang said that demand for NVIDIA's latest GPU line, that is Blackwell, is off the charts, with data center revenue surging about 66%. That was driven by compute and networking. The stock also jumped over 4% in extended trade as NVIDIA reaffirmed that the AI boom is nowhere close to a bubble, with hyperscalers including Microsoft, Amazon, Google, Oracle and Meta driving the orders.
And Alphabet shares climbed almost 3% after Google unveiled Gemini 3, its newest AI model and a major upgrade over Gemini 2.5. Now, Google says that model delivers better answers to complex queries, require less prompting, and will soon be integrated across search, now the Gemini app and the enterprise products. Now, analysts say that early tests show that it could meaningfully pose a stronger challenge to rivals like OpenAI and Anthropic.
All right, then let's keep it with the AI space. Now, Trump is moving to override state-level AI regulations, pushing Congress to adopt a single federal standard and warning that a patchwork of state laws threatens America's edge over China. His call reignites a fierce debate. Silicon Valley wants uniform rules to spur innovation, while both Republican and Democratic lawmakers, they insist that states must retain powers to protect citizens from AI risks.
And Target reported another quarterly sales decline and trimmed the top end of its full-year profit outlook as shoppers pulled back and hunted for deeper value. Now, adjusted EPS came in slightly above the expectations, but revenue missed the estimates. Incoming CEO said the company is ramping up investments, including 25% jump in capex next year to revive the growth after 4 sluggish years. Now, Target is also rolling out an OpenAI-powered shopping experience within ChatGPT next week.
All right, then let's shift focus to some macros. Now, the December rate cut is suddenly in doubt. The fresh FOMC minutes show a sharply divided Federal Reserve, with many officials now leaning towards keeping rates unchanged for the rest of the year. This despite a slowing job market. Now, persistently high inflation, clashing economic priorities, and a 43-day government shutdown that delayed key data have left the Fed flying partially blind. With the next meeting weeks away and no consensus in sight, the path forward is more uncertain than ever.
And former U.S. Treasury Secretary Larry Summers is resigning from OpenAI's board of directors, the ChatGPT maker set, and his departure comes after the release of the email showing he maintained a friendly relationship with Jeffrey Epstein long after the financier pleaded guilty to soliciting prostitution from an underage girl in 2008. Now, the announcement arrived one day after Larry Summers said he is stepping back from public commitments.
Moving on, as artificial intelligence reshapes industries, a growing chorus for experts and industry titans is sounding the alarm that as AI valuations may be dangerously inflated, risking a spectacular crash reminiscent of the late 1990s dot-com debacle. Now, OpenAI CEO Sam Altman recently warned of a bubble forming amid surging investments in AI. However, tech giants continue to pour in massive funds into AI infrastructure. OpenAI's valuation ballooned to $500 billion, while Nvidia's market cap surpassed $5 trillion. That's accounting for 80% of US stock gains this year and driving AI spending towards $1.5 trillion globally by year-end. We caught up with a whole host of experts to decode the same. Let's take a look at what they had to say.
Right now, if I look at it, I think if you look at the trends of technology over a period of time, and this is not the first time that AI essentially has come to this kind of a hype. I think previously in the 90s too, AI essentially came up to a particular point, but since there was a big challenge in terms of the infrastructure and adoption, I think that is when it basically died. And then it came a full circle right now in the 2020s as AI starts to basically ascend. And the key thing is right now, I think there's definitely a significant convolution of various technologies which give the ability for AI to deliver on its promise. But I think where the big challenge today is even today in terms of the economic adoption of AI itself.
I think we had this bubble for mortgage crisis, right? And that was a bubble for banking, so you could do quantitative easing, you could put restrictions on the banks. In this case, if everybody is going down, I mean, the government or anybody else, I don't think they can go and rescue large tech companies because they're in a bubble, and think there is no need to do that as well, because unlike banks, tech companies do not power or run the entire ecosystem. Even if they do, and the large giants, right, they can always cut off the costs by laying off people, which has already started. If you look at Amazon, they let go around 7,000, 8,000 people in the US. Similarly, Microsoft has been doing that. Our Indian companies aren't hiring. So I don't think the government has to do much for containing anything in AI bubble. The companies which mostly would have, propagated this bubble, they themselves will take the hit, correct themselves. They will go down to normal valuations. All of them had hired a lot of people during COVID with expectations. All of them, let us say, are doing investments in expectation of AI becoming the only piece of technology that matters. So I guess the government need not do much. The companies will take care of themselves.
So when NVIDIA touched 1 billion for the first time, I thought it's kind of beginning to look overvalued now. And look, here we are, right? It is 4.5 trillion. Oh, sorry, 1 trillion. Okay, so from 1 trillion to 4.5. Look, it's a chip supplier. It's a hardware company. I agree. It appears indispensable as of now because everybody seems to be wanting only NVIDIA GPUs. But could a hardware company have such kind of valuations and gross margins? NVIDIA has gross margins of 75 to 80% today. Will that be priced out by somebody else, some other cheaper players, or maybe AMD or somebody else catching up? Well, possible, right? So I'm more confident of the valuations that a Meta enjoys or a Amazon enjoys or a Microsoft or Google enjoys, right? That's more sustainable. NVIDIA, to me, looks like a little bit of a frothy zone as of now, but everybody wants their chips, so what to do?
All right, but now let's move on. And Israeli Ambassador Reuven Azar spoke exclusively to ET Now on a range of topics and India-Israel cooperation in various fields. Let's listen in to this excerpt from his interview by my colleague Sumita Karir.
We want to advance on the trade agreement. We have sent the Indian side a TOR for negotiations. We hope that during this visit they will sign off to the TOR so we can have a clear time frame to finalize a trade agreement. For us, a trade agreement is important, not necessarily because we want to export more goods to India. Israel is not a manufacturing hub, but it's very important for the chains of supply. We want Israeli technology companies to source in India. We want Indian companies to come to Israel. And when you have free trade, this encourages companies to work.
What are the key areas of cooperation that you expect to happen via this FTA?
We have an issue with Israeli technological companies not present enough in this country. And we want to create a landing pad for them to come and work here when you have a trade agreement that facilitates that. And we have initiatives to cooperate on quantum, on AI, and on many other things. Now, the last vertical we want to build, and we already started working on it, is the financial vertical.
Right.
The Tel Aviv Stock Exchange is negotiating with SEBI ways and means to facilitate the trade in financial assets. Many institutional investors in Israel are very interested in the Indian market.
Right.
And so far, it has been very cumbersome to buy stocks here. So they want to do an agreement to streamline that. And in Israel, we have huge institutional players that are holding the pensions of all the Israelis. Very robust pension schemes. We want to push them to buy here more. Generally speaking, in the banking system, we haven't been astute enough to create the tools that we did, the financial tools, to facilitate trade and investment. So we are negotiating a financial protocol. We already, sent, following the visit of our finance minister here a few months back, we sent a draft to the Indian side. We have.
All right, then let's move on and get you another update. Now, Prime Minister Narendra Modi is all set to visit South Africa from November 21st to 23rd. This is to attend the 20th G20 Leaders Summit being hosted by South Africa, especially at a time when President Donald Trump has announced that the US will boycott the summit. Sumita is back with us to take us through all the details.
That's right. Prime Minister Narendra Modi will be visiting Johannesburg, South Africa on November 21st to 23rd to attend the 20th G20 Leaders Summit that's hosted by South Africa. This will be the fourth consecutive G20 summit held in the Global South. And at the summit, the Prime Minister will put forth India's perspectives on the G20 agenda. The Prime Minister is also expected to speak in all the three sessions of the summit, and these sessions will essentially be focusing on key global priorities. This is going to be around inclusive and sustainable economic growth. There will be attention to trade and other development matters, for instance, development financing, debt challenges. In fact, the second session will examine how the G20 can contribute to building a resilient world by addressing disaster risks and climate change. And the third one will be about moving to shape a fair and just future, and that will also cover critical minerals and the role of artificial intelligence. Remember, these have been the two key sectors which have made news this year. We've seen the kind of curbs that China has put on rare earths and how that has had an impact on global economy as well. In fact, what we are also given to understand from an MEA statement that on the sidelines of the G20 Leaders Summit, the Prime Minister is also expected to hold bilateral meetings with some of the leaders who will be present in South Africa. He will be participating in the India-Brazil South Africa leaders meeting that will be hosted by South Africa. Now, an important thing to note is the fact that while the Prime Minister is attending the G20 summit, the US President Donald Trump has decided to boycott the summit in the wake of tensions between both the nations. And in fact, Washington has also warned Pretoria against issuing a joint statement. Now, G20, if you remember the last time India was the president of the G20 summit in New Delhi in September 2023, and of course it was under India's G20 presidency that the African Union officially joined the grouping of the world's major economies.
China's Shanghai index up about 0.1%. Hong Kong's Hang Seng again 0.3% gains over there at that 25,900 is where it's trading. Japan's Nikkei, that's actually up more than 3% right now. Massive gains coming in over there at that 50,100 level. So yes, that's about some of the Asian indices. Other than that, ASX 200, Australia's index, that's also trading up about 1% right now. It's at that 8,530 level. So yes, that's about it. Other than that, South Korea's Kospi index, that's also trading pretty much in the green, 2.5% of gains coming in over there. The index is trading at 4,024 right now. So yes, those are some of the Asian indices. If we talk about the Indian markets, we did manage to hold on to those 26,000 levels yesterday, ended above that level, and for the day, we're expecting a very positive start, 0.3% of gains at the start for D Street. Just about 81 points of gains is what the Nifty implied is suggesting. So yes, a positive start is what we are expecting, tracking the global cues.
All right. That's about the Asian market, but how did the Indian market shut shop just yesterday? Let's do a recap, and let me take it across to my colleague Snehi, who is joining us with what all happened in the markets yesterday. Snehi.
Well, yes, all in all, a very good day of trade is something that our market saw, because what a recovery from the day's low, a 0.5% uptick on the Nifty. 26,052 is exactly where the Nifty spot closed. A very sharp 140-point recovery on the spot basis. Sensex also was higher by about 0.6%. Nifty Bank, which was subdued throughout the day, for the most course of the day, also saw a very smart uptick, a 0.5% uptick on Nifty Bank, which was largely led by the PSU banks. Sectorally, it was the IT pack that did very well, about a 3% uptick on an intraday basis alone on Nifty IT stocks. It was names like Infosys, HCL Tech, LTI Mindtree, TCS. All of these stock took home some healthy gains. You also had PSU banks that did very well. So a couple of names from that space, PNB, Bank of Baroda, PSB, Bank of India also did very well. Other than that, you had Nifty Bank, Auto and Pharma that did well. FMCG and Metal were absolutely on the flat line. On the flip side, Nifty Realty was a sector that was slightly under pressure, the top sectoral loser, with names like Godrej Properties, DLF and Phoenix Mills that was under pressure. From the broader end of the market, you had names like Jaiprakash Power on the back of that Adani resolution that did very well. L&T Tech, Linde India, Latent View, Intellect Design were some of the broader market stocks that did well. On the flip side, immense pressure on Sammaan Capital on the back of the Supreme Court news flow, 13.5% cut over there. KC International, GMDC, Graphite India, Inox India were some of the top losers as well. So on the whole, this is how the day wrapped up. But yes, a very good recovery from the day's low on the Nifty, and above that 26,050 mark on the spot is where the Nifty managed to close.
All right, thank you, Snehi, for that roundup. But which are the stocks that we need to keep on our radar today, which could lead the rally, if at all? Today, Ashesha is here to take us through that list. Ashesha, over to you.
Well, yes, let's first talk about Adani Enterprises, and the company has informed the exchanges that they've received letter of intent as successful resolution applicant for Jaiprakash Associates under the resolution plan, and this has been received from the committee of creditors. On the back of this, keep an eye out on Adani Enterprises. Infosys, meanwhile, the buyback opens today. It will be open till the 26th of November. Remember, this is an 18,000 crore buyback, so this counter in focus. Meanwhile, NBCC, another big order win that has come in for the company. Remember, we have seen quite a few orders for this counter over the last few months, and now it has received an order worth about 3,000 crores. This is from MMRDA for development of Naveen Nagpur project phase 1. So 3,000 crore is a big order for a company of this size. So NBCC in focus. Tenneco Clean Air, meanwhile, this counter listed on the bourses yesterday, and Goldman Sachs bought over 21 lakh shares in the open market on the first day of listing of this counter, so keep an eye out on this one as well. Lastly, City Union Bank, where ICRA has gone ahead and upgraded the stock and the rating, where the outlook has been revised from ICRA AA minus to ICRA AA, and the rating from positive to stable. So on the back of this upward revision that has come through, City Union Bank also in focus.
Right. Thank you so much, Ashesha, for getting us all those details. But with this, let's tell you which are some of the other counters that you should be watching out for in today's trading session. And first up, NTPC Green will be in focus as the company has inked an MOU with SCCL for renewable projects, and this particular counter has got a positive development news flow, and this is for the development of their RE projects. Other than that, CG Power, a negative news flow coming in where the IT department has raised the tax demand of 365 odd crores. The company will file an appeal and rectification application that and also expects a favorable outcome. So negative neutral sort of a news flow is what we are getting to see on CG Power. Capri Global will be in focus as well, as the company has incorporated a wholly owned subsidiary, that is Capri Global Insurance Brokers Private Limited, to mark their entry into the insurance broking business. So quite an interesting update coming in for Capri Global. Sula will be in focus as well, as Sula Vineyards has informed that ICRA outlook has been revised to negative from stable. So let's watch out for that. A bit of a negative news flow out here. And lastly, Mahindra group of counters will be in focus, and within that, all the counters is something that we will be watching out for, because the company has its investor day today. So all eyes will be on that. It's going to be almost a day-long investor day and presentations to be made across the board for within the M&M group. So with respect to the key developments and the announcements, we will be watching out for that, while along with that, M&M Financials will be in focus as well. TechM, do watch out for all of these companies. And lastly, Mahindra Holidays and Resorts will be in focus as well, as leisure hospitality, while the brand name of Mahindra Signature Resorts has been signed, where the initial investment will be of 1,000 crores that is expected. So these are some of the counters that we will be watching out for.
All right, then, lots of counters to watch out for in today's trading session. But on that note, we'll slip into a very short break. We'll be right back with more news and updates on the other side. My colleague Ankur is here to take us through all of the details.
Yes, Sammaan Capital has defended the allegations put on them, which happened in the court. In fact, the company has mentioned that none of the allegations which were leveled against them have been proven either by investigative agencies, ED, CBI, EOW, or by the regulators, be it RBI, be it SEBI, and even ED is investigating the same. The company has said that it is listed entity and it has more than 4.5 lakh shareholders. The company has investors like LIC as well as BlackRock among them, and therefore the company follows all the due procedures which are there in the all these matters pertains to the allegations which were put on the company, that there was routing and rerouting of funds through shell companies, and it happened on a PIL which was filed in Supreme Court. In fact, there was a clarification during the hearing which was sought by the court, and Supreme Court has said that it has made no comments, and I repeat, it has made no comment on the merits of allegation against Sammaan Capital. All these observations were made during the interaction with the investigative agencies in the court, and finally it has been decided there will be a meeting which will be conducted in 2 weeks, and the direction has been given to officers of CBI, ED, SFIO and SEBI to jointly look into the allegations. But on the other hand, company is vehemently denying it, and even Mukul Rohtagi, who is representing the company in the court, has mentioned that there is no allegation which has been proven by any of the investigative agencies.
All right, thank you so much, Ankur, for getting us all those details. We'll watch out for action in Sammaan Capital, because the stock was down almost 13% in yesterday's trading session. But moving on to our big exclusive, Karnataka will achieve its IT exports target of 11.5 lakh crore rupees, well ahead of its 2030 deadline. And that's the word coming in from the state's IT and Electronics Minister Priyank Kharge in an exclusive chat with ET Now. The minister also spoke on the recent acrimony between Andhra Pradesh and Karnataka, saying that the state shouldn't quote unquote scavenge for investments.
We're already achieving close to 5.3 lakh this year, and the idea is to double it in the next 4 years through services and through GCCs. And I think we will be achieving that much before the targeted policy deadline.
And interestingly, the policy also makes mention of a generation of close to 90 lakh jobs in the same period. But the question that I'm sure is on everyone's mind is that in the era of AI, and where companies are looking to shore down the number of jobs per employee, given that automation has come to stay, how viable is this target that you've set for yourself?
Just look at the ecosystem that we have built over a period of time. We corner 47% of all investment in global capabilities centers. And now, whether it is AI or deep tech, it's getting into various sectors as well, in every possible vertical. And we are supremely confident that we'll be able to achieve it only for the fact that we have that kind of human resource here, that kind of talent pool availability here, that is not catering to the Bengaluru ecosystem alone. Now, if you look at the program that we have devised, the Nipuna program, it says skill locally, work globally. So why can't people who are being skilled in Bengaluru work in Brussels, Brisbane, Britain, anywhere across the globe? And people are looking for our talent pool.
Let's move on and get you in some more updates. Now, the government has appointed Indian Revenue Service Officer Sandeep Pradhan as a whole-time member of Securities and Exchange Board of India for a period of about 3 years. Pradhan replaces Ashwani Bhatia, who demitted the office after completion of his term as a whole-time member. He would be the second IRS officer serving as a whole-time member, as his batchmate Kamlesh Chandra Varshney has been with the capital markets regulator since September 2023. Now, apart from the chairman, SEBI can have 4 whole-time members appointed by the government. So, yes, that's the new appointment coming in for SEBI.
All right, let's move on to another story then. And days after NDA's massive victory in Bihar, the stage is all set for Nitish Kumar to take the oath as the Chief Minister of the state for the record 10th time at Patna's historic Gandhi Maidan. Several top NDA leaders, including Prime Minister Narendra Modi, Home Minister...
Many as 95 companies are scheduled to see their pre-listing shareholder lock-ins expire, unlocking shares worth a massive $30 billion. Now, it's important to note that not all of these unlocked shares will actually hit the market. A significant portion of these shares continue to be held by the promoters and promoters group, who typically do not sell these shares immediately. But even so, these unlocking can create supply pressure in the market and are closely watched by the investors. Now, let's look at the major upcoming lock-in expiries. Scheduled for today, we have Vikram Solar unlocking a 3% of their outstanding shares valued at around $34 million. For the next week, we have lined up Go Digit General Insurance, a sizable 20% unlocking to be seen there, worth $742 million. And also the biggest one this season, NTPC Green, with the massive 69% of its outstanding shares unlocking, amounting to around $6.5 billion. Coming for the month of December, we have Office Space Solutions, 20% worth $90 million, followed by Okla India. Also, we have for the month of 8th of December brings multiple expiries. Skoda Tube seeing 54% unlocking, worth $64 million, and Aegis Vopak. Pine Labs is also there, seeing 2% of its unlocking, worth $49 million, followed by Lenscard Solutions for unlocking of 2%. And a notable $184 million of value unlocking. Also, we have Billion Brains Garage Ventures with their unlocking of 2%, valued at $232 million, followed by Pine Labs on 12th of December, unlocking 3% of its outstanding shares, worth $99 million. And also, Urban Company is included in the list with 3% valued at $66 million. These unlocks will be closely monitored, particularly at the companies with a higher percentage of outstanding shares that are coming out of the unlock, and as they have the potential to influence the short-term stock momentum in the market.
All right, thank you so much, Mithali, for getting us all those details. But hang on, as we are nearing the end of the year now, and it is the time to analyze how the fund flows have done till now. The FIIs selling pressure has been consistent as the DIIs were buying altogether. Let me once again take it across to Mithali, who's here with the research data that she has put together for this year's fund flows. Mithali, take it away.
Right, so foreign investors continue to pull back, and as of November 15, we have seen that FIIs have recorded a net outflow of around 13,652 odd crores, extending their selling streak. In sharp contrast, we see that domestic institutional investors remain the backbone of the market, infusing around 41,352 odd crore rupees during the same period and showing unwavering confidence. Now, in fact, DIIs have delivered consistent inflows, seeing from the month of January to November, and showcasing a powerful counterfeit to the foreign volatility. The year's biggest shocker was seen in the month of January 2025, with FIIs existing a massive outflow of around 86 7,000 odd crores, one of the steepest monthly sell-offs of the year 2025. Yet, we have seen the DII stepped up again, and more than 86,500 odd crore rupees of inflows was seen by the DIIs. Now, turning to the sectors between November 1 to November 15, we see where are the FIIs investing and where are they pulling their money back from. So, telecom sits at the top with an impressive 9,413 crores of inflows seen from the FIIs for the month of November, for the first fortnight between November 1st to November 15, and this was the strongest sectoral momentum for this month. Energy, specifically oil, gas and consumable fuels, adds to the optimism with around 3,000 crore rupees entering the space. But not everything is shining. Outflows hit several key sectors. Now, IT has seen the steepest hit, seeing 4,873 crores of outflows from the FIIs. We also have consumer services, healthcare and power also facing significant selling pressure from the FPIs, and even the defensive plays like the FMCG and financial services registered outflows of around 2,000 crore rupees each. So overall, the story of 2025 remains unchanged, and FIIs are cautious while DIIs still seem to be resilient in the economy.
All right, thank you, Mithali, for that update. So yes, let's move on and shift focus back to some primary market data. Now, Fujiama Power is going to list today, and the market is watching closely as the stock comes at an issue price of 228 rupees per share. Now, if we talk about the grey market premium, that's barely positive at about 3 rupees, signaling just about a 1.3% upside. So expectations are largely muted for this listing that is due later today. Let's just break down the possible listing outcomes. Now, if the stock lists weak, a 20% discount would put the share at 182 rupees, and even at a 10% cut, the price comes to 205 rupees. So at these levels, the valuations look more reasonable. The post-IPO PE would fall to 20 to 23x based on post-issue EPS of 8.8 rupees. Now, if the stock lists flat at the issue price of 228, Fujiama Power would list at 25.9 XPE. That's right in the mid-range and of its valuation band. So yes, that's about some of the scenarios that we are watching out for as far as Fujiama Power is concerned. Let's wait out for the listing.
All right, let's watch out for Fujiama Power in today's trading session. That's going to be the new kid on the block. But moving on, let's put the spotlight on Infosys, because Infosys 18,000 crore share buyback opens today. Where investors should participate or not, that remains to be the key question. What are the tax implications of the buyback? Ashesha is here, who's joining us with all these answers. Ashesha, take it away.
Well, yes, Infosys buyback opens today. It will be open till the 26th of November. But the big question now is, from a taxation standpoint, if you're holding shares of Infosys, does it make sense to tender your shares? That's the big question, and that is what we are going to answer. Now, as far as tax implications are concerned, remember the full amount that you receive from the company, which is 1,800 rupees per share in case of Infosys, will be taxed as dividend income and not capital gains. So that's one major implication, and because it is taxed as dividend income, remember you will be taxed on that amount basis your slab rate. So if you are in the 10% slab rate, it will be basis that, and if you are in the higher tax rate, which is 30%, you will have to pay 30% tax on that dividend income, which means that if you are a small shareholder with low income, you will be charged lesser, but if you are in the higher tax bracket, you will have to pay more tax on this, and then it is negative for larger shareholders and people who have higher income. Now, apart from that, you also have to pay TDS on this, 10% for residential shareholders and the current residents, Indian residents, and 20% for non-resident Indians. This, of course, will be debited, and you will be given a credit for this when you file your income tax return. Apart from this, third implication is with respect to the cost of acquisition of Infosys shares. This will be allowed as a deduction as a capital loss, which means if you don't have any capital gains to set it off against, you will not be able to utilize this amount. So yes, three major implications, but net you will benefit if you are a small shareholder and in the lower tax bracket, but you will anyway have to pay the TDS amount as applicable as per the laws.
All right, thank you, Ashesha, for all that explanation. All eyes on Infosys then. But with that, we're completely timed out on this edition of Market Cafe. Srishti and I will take your leave, but don't go anywhere. The market will take all the action forward.